It was quite a strong day for the market today. The strongest day, in fact, since March of this year. S&P up over 1.7%. And it looks like we've hit the bottom, the local bottom, and we're making some sort of rally. Now, we don't want to make broad market predictions on this channel unless there's some sort of macro event. We did that early. That was our founding, claiming that there was a good chance of a coronavirus downturn, etc., and calling the bottom. However, now we're in a more normal bull market environment, and we don't want to make predictions about the broad market. We want to beat the broad market, and there are many trends that we think we can use to beat, one of which is inflation. It's no surprise that inflation is occurring. We've been in our energy trade, and energy is certainly experiencing inflation that's benefiting us investors. However, there are still many skeptics out there on the potential for inflation. Jamie Dimon, I respect him very much. However, I think he's looking at the short-term solutions as being too strong of a remedy for inflation. It's been since the beginning of the pandemic that people had predicted supply-related inflation, and they've been right. There has been certainly supply-related inflation. There's been these supply bottlenecks. We've seen some of them ease, and we've seen some of them alleviate price pressures. However, I don't think this portrays the entire picture, and we'll see persistent and longer-term inflation. So I don't think opening the ports 24/7 is going to do anything about the fact that the money supply has increased 40%. In addition, the wealth effect has been astronomical. If you look at Michael Burry's tweets recently, you'll see the 1% has soaked up an enormous amount of this liquidity. Now, that has to trickle out throughout the system. We had people complain about wealth inequality before. If wealth inequality got even worse, I think it's only a matter of time before that leveling out process begins. I'm not saying communism is going to occur. I don't want that to occur. Looking at firearms right now, looking at purchasing my first firearm. I'm sure many of you have firearms. It's never going to occur in this country, at least in this state of Texas. Anyways, that wealth inequality is going to become less extreme. Hopefully, honestly, as rich as we want to get, hopefully it becomes less extreme. And that's going to mean the bottom is going to have a little bit more purchasing power, and that inevitably means inflation. So the wealthy have received all of this money. That's going to go back down here. That means inflation. In addition, we've seen wages rise, and they're continuing to rise, and that's unlikely to reverse. So, yes, shipping lanes are opening. Yes, supply bottlenecks are easing, but that's only one aspect of the whole situation. If you even look at things like lumber and copper and used cars, they had eased for a period there, and then they're starting to go a little bit in the other direction. We're going to see what happens with that, but inflation is certainly not an issue to put to bed. It seems like the public and a lot of Twitter knows this, but a lot of Wall Street seems to be clinging on to the idea that inflation is transitory. And they seem to be persuaded by their love affair with bonds, even though at the same time they acknowledge bonds aren't a good investment. But just so much of the market depends on it, and this market is incredibly manipulated. And we're going to see interest rates rise, and we're starting to hear people talk about that. So it's going to be interesting. I think personally, a lot of people want to say rising interest rates affect the market, and I certainly believe that's true. They compete in the market of investment dollars. However, I believe ultimately inflation is a lift all boats event. So if you have a cash flowing business, it should do well, even though it's a stock. So let's go over some names we're liking. We've certainly talked about energy. Energy is our favorite sector, our most overweight sector, and our largest allocation. Energy stocks are severely underpriced. They're in a 5 or 10 year bear market, and for reasonable reason. There's been a significant advance in their competitors. However, the EIA, the Governmental Energy Association, expects fossil fuels and oil alone, but fossil fuels more broadly, to remain the most used energy source until 2050, and for energy consumption to increase 50%. Yet these companies, many of which happen to be priced at less than a 10-year forward multiple. That is mispricing. They should be having a 20 or 30-year forward multiple. So there's significant upside in these energy stocks. They should also benefit from rising interest rates because they compete for long-term investment dollars, because interest rates, bonds are long-term investments. But energy stocks are the epitome of short-term investments, cash flowing very nicely now, paying a dividend, etc., etc., etc. Energy stocks we like for a magnitude of reasons. We're not even concerned about the price falling. Supply bottlenecks doesn't seem like an issue in the energy industry. Russia is certainly unloading more supplies into the market, but at prices well above what we're paying here in the United States, and Putin's expecting $100 oil, so he's not going to do anything to keep it down. And $8 to $9 per unit natural gas versus 5 and change we're currently seeing here. So, further upside in the price per barrel, plenty of room for the stocks to catch up, and then plenty more for them to go as the price per barrel increases. And again, no reason to be fearful about supply increases in the energy space because of the green wave and because of the hostile governments. Why would they put investment dollars into new production when they can just put it into their own pockets, right? Blame the government for being so woke. Go woke, go broke. Next up on the agenda, we have mining and material stocks. These stocks can quite easily adjust for inflation and should benefit from more macroeconomic events like the infrastructure bill. Not only here, but Europe is talking about infrastructure bills as well. We're seeing emerging economies throughout the world need to develop infrastructure projects. And that means more mining and materials goods. So names I like in this space, BHP, which has a number of crucial resources for the current economy. However, they would like more than half of their future revenues to come from electronic vehicles and what they describe as future metals. Electronic vehicles use these complex, advanced, shouldn't be a better term, engines that have magnets, and these are rare earth metal magnets. So BHP plans to get a lot of those rare earth metal magnets. In addition, GOLD, it looks like gold's taken a very big hit, possibly rightfully so. I'm certainly a Bitcoin fan. I have a good allocation of Bitcoin myself. However, I understand the importance of gold and how it is used in every single computer, essentially. So it's a rare earth metal, very nice, very conducive to light, and GOLD also does a lot of copper, so I like that particular stock as well. Finally, hyper growth, real growth, not the growth that other people call Apple, Amazon, Microsoft. They're great companies. I'm not trying to say they're bad companies, but are they going to double from here? Well, people have been saying they wouldn't, and they have, but I don't think they will again anytime soon. I think there are companies like CRISPR Therapeutics, Editas, Smile Direct Club, etc., that can double quite meaningfully or more and are very cheap compared to the long-term valuations. So these are the stocks I want to have in addition to materials and in addition to energy. There's a couple more stocks like Altria that I like just because of the good cash flow that seems to be solid. I don't know if any of you ever had addiction. I know plenty of people who've been addicted to cigarettes, Juul, etc. They spend a lot of money, and it's a pretty consistent cash flow, dividend. We know how cash flowing businesses are going to do in this environment. So those kinds of stocks. That's how we're positioned. And until next time, peace out.